Welcome to the Economy and Politics show designed for conversations on economy and the policies and how it impacts household livelihoods. I'm Ottoabasi Abasiekong. In this edition, we'll be looking at the Central Bank of Nigeria's recent announcement that it has collapsed the multiple exchange rate windows into the investors and exporter window. 3 months after, the Naira at the parallel market is now about 1,000 to $1. The I&E window is still over 700 Naira. There is a huge debate over the current foreign exchange market framework and whether it is truly liberalized. This edition will discuss Nigeria's FX aggregation, the gains and pains. And joining me virtually for this conversation are Dr. Muda Yusuf, CEO of the Center for Promotion of Private Enterprise, and Mr. Kelvin Emmanuel, CEO, Diary Hills. Nice to have both of you on the program.
Thank you.
Thank you.
Let me begin by asking you, Dr. Muda, how would you assess 3 months of FX aggregation given the position of the CPPE when this was announced in June?
Well, the outcomes have not actually matched expectation because I had expected a much better. Perhaps we were building on some assumptions which turned out to not to be quite valid after all. I never expected the kind of depreciation that we experienced, as a result of the convergence of the exchange rates. And I also never expected the kind of speculative activities, especially practically everything off balance. So it was completely at variance with my expectations, completely.
To further the question, has it addressed the issue of arbitrage and those concerns that the central bank set out to address?
Yes, initially, at least in the first few weeks after the policy was announced, we saw a convergence momentarily, and it remained like that for about 2 weeks or so, until suddenly there was a sudden change of events. Right? So I think from there on, we now started to see this arbitrage. And unfortunately, the publication or the release of the financial statements of the Central Bank of Nigeria, this 6 years audited accounts of the central bank that was released, speculation in the market, and further now worsened the situation. So there was a lot of anxiety as to the state of the reserves and all of that. So that's further contributed to the further depreciation in the currency. So we are now back to the problem of huge arbitrage or huge premium between the official and the parallel market rate. And at this point, it's difficult for me to continue to advocate for the convergence. It's very, very difficult because at this point, should we now also be looking at the political economy of the whole thing, that perhaps rather than suppress the markets completely, we should have a free market window within the banking system where autonomous funds can trade freely without any encumbrances, so that we don't have situations where people are either doing under the table deals or going abroad or taking transactions abroad, not bringing remittances and so on. So that is where we are, unfortunately.
I know that, Doctor, you advocated for a market-determined foreign exchange regime. And now, of course, you're saying that if this convergence is leading to this situation, we need to review everything. I will get back to you on that. Now, for Kelvin, there has been increasing calls for our real net reserves. And recently, of course, we have seen reports from JP Morgan talking about our real net reserves being at $3.5 billion. It created a lot of debate. And also we have backlogs of about $6.8 billion that needs to be cleared. But I just want you to speak to what must be done to clear these backlogs and the short-term measures to boost FX inflows. And also this issue raised by some economists that central banks should engage deposit money banks to lend it all the domiciliary accounts to settle verified backlogs. Does that really make sense at this time?
Well, I'll tell you that in my estimates, the net reserves are at $5.6 billion. And the reason I said 5.6 is because the gross reserves are $34.1 billion. You have FX swaps, commercial FX swaps with Nigerian banks of about $11 billion. You have FX swaps with foreign banks of about $10 billion. You have securities lending of $7.5 billion. So you have encumbrances of anywhere around $28.5 billion. So your net reserves are 5.6. Now, if your forwards for 1 year, you have matured letters of credit. I mean, that is even the most disastrous for Nigeria, because you basically have letters of credit that are matured, that are due for repatriation of FX, and the banks are unable to provide liquidity for those letters of credit. You have capital and dividend remittances. Capital remittances falls under your airline intervention funds. You have about $880 million. The CBN says that it's been drawn down to about $783 million. And the numbers keep piling up, right? So if you don't have a situation where the CBN can clear the forwards of about $6.8 billion, you basically cannot get FDIs into Nigeria. You cannot get FPIs into Nigeria. You have a problem of your treasury bill rates somewhere around maybe 12.9%, 13.3%, 13.5% is at variance with your inflation rates. Your inflation rate is at food inflation is over 29%. Headline inflation is above 25%. There is a huge gap, right? There is a huge gap between your inflation rates and the yields that investors get. What's the incentive for FPIs bringing in liquidity to Nigeria? They don't have any incentive because they have a negative return on yields. They cannot repatriate FX. Even if they use the non-deliverable forwards market that the CBN is a market maker of and provides contracts for, they can't repatriate their FX because FX is just not available. So in my view, now not dwelling on the past, the current situation is very messy because the new governor of the central bank that is yet to be confirmed, very sure that tomorrow when the Senate resumes plenary, they'll begin to talk of confirmation hearings. He has to deal with securities lending to the two external asset managers of the central bank, JP Morgan and Goldman Sachs. The new governor has to deal with revaluation losses the central bank will pay to the commercial banks that they borrowed 37.9% of total domiciliary deposits from. Revaluation losses typically measures the difference between which that FX swap contract was entered and where the I&E window presently is at. He has to deal with those losses. And when you consider the fact that MPRO plus 3 in 2024 is only going to pay 1.4 trillion naira in interest to the Central Bank of Nigeria, the question I have is, how is the central bank governor going to generate money to pay the revaluation gains that the banks have booked on their balance sheets?
Yeah.
How do you convince investors to come into Nigeria with these kind of fundamentals?
Very important, Kelvin. Very, very key question you've raised there. And I'll get back to you on the issue of the forwards. But let me ask Dr. Muda, this FX market looks elusive. What can we do to navigate the challenges? And when I mean elusive, we've seen several issues of preferential FX allocation, which of course is an issue. We've seen the impact on the manufacturing sector, the business community. We've also seen the issues of the 43 restricted items that cannot access the foreign exchange and the issues around the BDCs, that's the Bureau de Changes. For you, how do we navigate this whole elusive FX market?
Well, it's a very challenging situation, and I agree with Kelvin. There are things that can be done on both the supply side and on the demand. We are talking about liquidity. On the supply side, just as I said, as much as possible, we should not suppress inflows through the imposition of unrealistic rates. So you should remove all barriers to inflows. Secondly, is to see what we can do with and all of that, exporting, removing barriers to oil export and so on. And if there are elements of it in terms of equity that we can also put up for sale without necessarily losing control of ownership of some of those assets, we can begin to leverage on those assets, to be able to generate liquidity, Those are the things that one can think of. And of course, there's also the option of going to IMF. Of course, that also has its own implications and connotations. Yeah, and the perception is great, but it's a very serious situation, so we have to put all options on the table.
But how your business community, how are they coping? You represent the private sector.
The demand side, the private sector, we need to do a lot more around import substitution, so that you can at least reduce the pressure of demand. And one way out of it is to see what we can do around our oil and gas imports. If you can accelerate the process of all these refineries, because that you pay on imports. So we can do that. That will help. And as far as possible, if the private sector players can also substitute some of their inputs, accelerate their backward integration programs, although that may not be a short-term thing, but in the medium to long term, that could also help. Accelerate the process of backward integration and import substitution. So basically, I think those are the things that I think that can be done, to salvage the situation. And once we're able to at least manage to clear the backlog and we're able to restore some confidence or stability and confidence, maybe we begin to see the normalization of the situation.
Yeah. All right, Doctor, that's very clear. Liquidity is a key issue. And Kelvin, posturing and signaling from the government is very critical to attract foreign direct investment to boost FX inflows. That confidence building is very crucial now. What should be the best approach? We've seen the president in India. We've seen him at the United Nations General Assembly 78th edition. We've seen him in United Arab Emirates trying to woo investors to come on board. And these are part of the things that the Minister of Finance, Mr. Wale Edun, said. We've done a lot of pitch. We've projected Nigeria. We expect a lot of investments. At least this liquidity will help in a way to begin to clear the backlogs. What do you see around posturing and confidence building?
I agree when Dr. Muda says that we have to put all options on the table, because Nigeria is at DEFCON 8. This is critical. Situation is critical. The dollar, the exchange rate crossing 1,000 naira is a psychological threshold.
Yeah.
And it's not good. It's not good, especially considering that from next month, they have to import PMS to Nigeria. Crude oil price is $93 per barrel today for Brent. The USD is above 1,000. Question is, will CBN be able to provide the independent marketers about $400 million they need to import PMS to Nigeria? That's a question we have to answer.
Yeah, that's
NNPC doesn't remit until December. NNPC doesn't remit, will not be able to remit more than $250 million to FAC in terms of revenue on a monthly basis, because they have outstanding forwards in crude oil swaps that they did for direct sale, direct purchase that will end in November of 2023. And this is the reason why I've severally called for the president to order for a special investigator to do an external forensic audit of NNPC and all its subsidiaries to reconcile accounts on how DSDP was managed for crude oil swaps under the previous subsidy regime. FAC has contested the remittance of NNPC, but that's just for another day. the issue on the table is converting pledges to certificate of capital imports.
Yeah.
They got pledges. How are you going to convert it? When are you going to convert it? Nigeria needs FX now.
Yes.
When are you going to convert the money into actual CCIs that comes into the CBN and that is provided to the markets in Nigeria? IMF should be the last option, but we're not very far away from IMF right now. Because if the exchange rate continues to drop, PMS price goes up, food prices continue, and Dr. Muda made a very important point about import substitution through backward integration. I'll give you a typical example. There is a chemical called calcium hypochlorite. It's used in the manufacture of disinfectants and commercial bleaches. Calcium hypochlorite is a mixture of mineral lime and calcium hydroxide. If you look at the supply chain for calcium hypochlorite, you'll discover that Nigeria actually has mineral lime. The question is, just like calcium hypochlorite, are you saying that, and there are several other chemicals like this, are you saying that we can't produce these chemicals that are imported for manufacturing? There's so many layers of manufacturing that Nigeria is actually lagging behind. The question is, the economy is an import-dependent economy that has always survived on a weak, on a strong naira to be able to manage its inflation and determine its interest rates and exchange rates. Inflation, interest rates, and exchange rates. The government says they have a target of 6.6 to 9% inflation rates that will keep your interest rate or MPR, low, single digits. The question is, how do you slow down food inflation and slow down headline inflation? You have to work on the supply side. And for you to work on the supply side, you have to focus on backward integration. I'll give you another example. Look at the National Sugar Master Plan. It has level 1, 2, 3, and 4. Nigeria is still at level 1. Nigeria imports 1.6 million metric tons of sugar every year at anywhere around maybe $2.2 billion per year. Only 3 companies have waivers to import sugar into Nigeria. There is no competition. The National Sugar Development Council, NSDC, is not working to ensure that the companies are only giving quotas to import license based on their corresponding targets of backward integration in Nigeria. Because you have a system of crony capitalism where the CEO of a major company can call the presidential villa and say, this regulator is not playing ball with us, and he gets a pass. That's what has always been the problem. So if you don't do backward integration, you're going to have an economy that is perpetually dependent on imports in terms of enterprise manufacturing for your FMCGs and consumer manufacturing to be able to survive. Why did GSK leave Nigeria? GSK left Nigeria because it marked the US dollar to 1,000 naira to a US dollar, even when you still had exchange rate of 700 and something, 800 and something, and it just couldn't cope. So if you don't address the supply side issue, even if you get liquidity into Nigeria through maybe intra-central bank lending, where the Central Bank of Nigeria goes to the US Federal Reserve and uses the terms of auction facility that is available at the US Central Bank for an issue of the currency, the US dollar, how long will it last?
That's a big question, Kelvin.
How long will it last? You're entering into Q4 of 2023, and you're going to have trade goes on every day in Nigeria. Just letters of credit, capital dividend remittances. Airlines are still selling tickets, even if now they are doing off by they refuse to open inventory. They are doing off inventory, which is the reason why international plane tickets originating from Nigeria is actually more expensive than other parts of the world. So these are issues, but taking it into time frame, the most urgent solution right now is for the Minister of Finance to coordinate with the central bank team to ensure that they can get a temporary solution to clear the outstanding FX forwards of $6.8 billion. That's the most pressing solution. The next solution is to get the NNPC to IPO. There's no reason why NNPC is 100% owned and they are doing $1.5 billion in profits. When Saudi Aramco has a trading company in West Africa that trades petroleum products around West Africa.
Let me get from Doctor. Doctor, what in 1 minute, what is the step that we should expect from the nominated central bank governor, Dr. Yemi Cardoso, what should be his agenda to effectively manage the foreign exchange in 1 minute?
Well, the agenda is to look at the key variables, particularly on the supply side, those variables that are within the remit of the central bank. And beyond that is to work closely with the fiscal authorities, because this is not a matter that the central bank alone can handle. It has to work with the fiscal authorities to see what can be done on the fiscal side, to ease this supply crisis. Because unless we deal with the supply crisis, there's no way we can bring confidence into this market or even into the economy itself.
All right, Kelvin, let me leave you with the last 1 minute just to close your thoughts, what the CBN governor's agenda should be, and of course, what you said about the IPO of NNPC.
Dr. Yemi Cardoso needs to do a comprehensive reform of the CBN Act of 2007, and also the Bank and Other Financial Institutions Act, both year of 2020. Those two acts needs comprehensive reform. I also expect that he's going to work closely with the chairman, Senate Committee, Banking, Insurance, and Financial Services, given that Tokunbo Abiru was once an MD of a bank. So Tokunbo Abiru, more than anybody in Nigeria, should understand what oversight means to the central bank, just like the central bank is a prudential regulator to commercial banks in Nigeria.
Thank you very much, Dr. Muda Yusuf, CEO of the Center for Promotion of Private Enterprise, and Mr. Kelvin Emmanuel, the Public Affairs Analyst and CEO of Dairy Hills. Thank you for this enlightening conversation on Nigeria's foreign exchange aggregation, gains and pains. It was nice having you on the show.
Thank you.
Thank you very much, Kelvin.
Thank you.
To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow the social media platforms to engage. Let's just update you that ProShare is launching its Tier 1 banking reports. Very incisive one. And you can follow our website to get all the updates as you get to know this very big thing coming out. To come your way again, enrich yourself with the knowledge of socio-economic developments around you, because it is a wise thing to do. I am Ottoabasi Abasiekong. Thank you for watching, and bye for now.